After identifying the initial 1, 2, 1 setup, our goal now is to focus on the last part of the combo, the smaller wave 2 pullback, or more commonly seen as the E3 of the larger DCS. By observation, we know that this is the last DCS correction before the wave 3 of 3 run begins. And we believe that finding this corrective move, this smaller E3, is central to a successful technique used when trading wave 3s. Since the E3 is a corrective move in itself, we can use the parameters of the bigger wave 2 erosion to characterize this E3 pullback. This means that it also starts at the peak of the smaller wave 1 after a lower time frame bearish divergence. Then afterwards, a 3-wave correction will take place, whether in the form of an ABC or a WXY pattern. Then lastly, an occurrence of a lower time frame bullish divergence. The main difference between this E3 pullback with a wave 2 erosion is that at the current stage of the setup, we are already inside wave 3. This is crucial to our analysis because we can assume that prices are now not bound to erode the most recent run-up. This brings us to an important principle. The shallower the pullback, the more evidence for aggressive buying. And during wave 3s, we want to side with aggressive buyers. This means that smaller E3 pullbacks above or at the 50% Fibonacci level are preferable than those compared to retracements beyond the 50% Fib. If you notice from the headline, there's an emphasis in trading the E3 pullback after the transition. Focus on E3. Why can't we just trade the wave 3 by entering at the E1 and E2 of the larger wave 2 erosion? We are allowed to trade those two entries, but remember that we always want to trade the path of least resistance. During the transition phase, the wave 1, the smaller wave 1, sentiment is just starting to shift from negative to positive, which means that the market is still not convinced that we are already inside a bull market. This translates to overhead supply at key levels at Fibonacci retracement levels of the previous 1-2 structure. Also, the similar 1-2 can be prolonged further than our expectations. We might trade the E1 and E2 only for a swing type of trade. But if we were to hold and ride the longest and strongest part of the move, wave 3, the most optimal entry is the E3. After successfully identifying a 1-2-1-2 setup, it is now our objective to carefully plan our wave 3 trade. Note that the only special thing about this E3 pullback is that we are inside a wave 3. But when it comes to the price structure, it just looks like any other DCS formation. Having said that, since this E3 trade or E3 pullback is a corrective move in itself, we can subdivide this portion into the 3E framework of a DCS, which means that inside this E3 pullback, we have an aggressive E1 entry, a neutral E2 entry, and a conservative E3 entry. For the purpose of this module, we will use the notation E1 of E3, E2 of E3, and E3 of E3 to denote the formation of a DCS within the larger DCS. Like any other E1, E1 of E3 can be identified after the confluence of the following setups. Number 1, a bullish divergence in the lower time frame. Number 2, a rest on a Fibonacci retracement level. And number 3, preferably at the bottom part of our projective channel. A trader can use a failure swing technique to buy and correctly time the move right at the E1 of E3. After an intraday bullish divergence has happened at the said confluence levels, a trader can buy the stock once it pivots up and performs a neckline break. In technical analysis term, this is a price breakout above the middle point of the two valleys in a divergence. A stop must be placed right at the low of the E1 or around 1 to 2% below the low to protect us in case we made a wrong count or in the case that there is a throw under right at the E1. It also helps in our analysis if the E1 of E3 rests directly right above the channel bounded by the erosion. In trading language, this simply means a healthy pullback or a retest of the breakout line. E2 of E3 is just a breakout of the smaller channel drawn after the larger DCS. This is where participation and interest starts to become obvious. From here, there will be a noticeable change in volume as the accumulation phase is already over. Volatility will also expand after a period consolidating through a tight range. Breakout traders can use the smaller DCS channel as a pivot point for an E2 of E3. Note that we also use this channel as a warning sign for invalidation. That is, if prices move back to the smaller DCS, we will be careful monitoring our positions. Lastly, stops for the E2 of E3 are more loose as compared to the E1 of E3 and is advised to be placed right at the low of E1 of E3. E3 of E3 is the final pivot towards the continuation of the wave 3 of 3. A good indication that buying interest is strong is the presence of a high E3 or a high pause after the E2 of E3 breakout. This could come in the form of a flag, a pennant, or a pocket as commonly known in classical technical analysis literature. Note that at this point, it is almost always very difficult to time your entry and chase the trade. If you were to trade the E3 of E3, stops should be placed right at the breakout point of the channel. It is advised that when trading E3 of E3, you should already have an anchor placed right at the E1 of E3 or at the E2 of E3. E3 of E3 is just a pivot point to complete and to make your position size full. In summary, the anatomy of a 1-2-1-2 combo is as follows. The 5-wave baseline consists of the first, third, and fifth wave being all 5 waves. Waves 1 and 5 could be diagonals or impulses, while wave 3 should always be an impulse. A three-wave erosion with wave B or wave X being a three-wave structure where the erosion usually starts and also ends with divergences. A transition that is a five-wave move that is bound within the range of the baseline. And finally, an E3 pullback after a pronounced breakout of the channel.